Today I'm going to talk about what small investors like ourselves can do in times like this where things are just very turbulent, there are bank runs happening, big banks are collapsing. So what can we as small investors do? The first advice I would have is don't panic. Now, these are of course not good events, but bad events have happened before and they've happened multiple times throughout history. And this is nothing new in the world of finance, and we should just all be calm and treat our finances properly and not do rash things because the market seems crazy right now. The economy has survived many crises before, including the Great Depression, the Great Financial Crisis, and I'm sure that this would just be another blip in its upward trend, and we should not panic sell our investments right now because that would be the worst thing that you can do. In fact, I feel that people should still continue to invest, but instead of dumping in a lump sum into the markets right now, you should consider breaking them into smaller amounts and invest them on a monthly or even quarterly basis. Research has shown that lump sum investing actually beats dollar cost averaging or investing smaller amounts over a longer period of time, 2/3 of the time. But given how things are a little bit iffy right now, I think that it's prudent to break up your sum of investment into smaller bits to smooth out the risk, because I think chances are quite high that we are in the 1/3 of chances where dollar cost averaging actually will beat lump sum investing. Or of course, if you're comfortable with putting in a lump sum, by all means go ahead and do it. But for most people, I think that if breaking up your investment into smaller bits will make you less hesitant about investing, then this might be the best thing that you can do. And again, for most people like us who earn a salary each month, investing monthly is actually not so much of a choice rather than it is a practical concern. So be it lump sum investing or regular investing, continue to invest in the market and not hesitate, because when markets go down, that's actually the best time to invest. Now, I hope it goes without saying that investing doesn't mean you buy ILPs, and if you're new to my channel, tap here for why ILPs are a bad idea. Now, do take 1 second to drop me a like right here. It really helps my video and channel out, so thanks for supporting. My next tip is perhaps quite obvious, but you should be saving more money now that things are more uncertain. You should build up your emergency savings because layoffs are getting more and more common now, especially depending on the sector you're in. Having more cash will of course help in things like losing one's job or in events where the market really goes down a lot and we need a war chest to take advantage of the market opportunity. Taking up a side hustle is something I always encourage, and I think it's even more relevant now than ever before, because not only can you earn more money, it also provides you with a little bit more job security when your income is not coming from a single source. So yeah, get an extra job if you can, and it doesn't need to be big. You can just start teaching tuition on the weekends. Now, even in economic downturns, parents still pay for tuition classes. And then next, you should of course save more of your income rather than now seeing that your income has increased and then spending more on all kinds of frivolous nonsense. Earning more money also includes taking advantage of fabulous deals like the one in this sponsored message, and I'll see you after the message. Webull has this insane deal where you get 5 free shares for free, and all you have to do is just fund any amount at all, and you can walk away with 5 free shares. All you have to do is sign up with this link, fund in any amount, maintain it for 30 days, and you will get 5 free shares worth up to 500 USD. What's more, you also get a trading app that offers you 0 commission, 0 platform fee, 0 settlement fee, and you can trade from as low as $5 per trade, and you also support this channel. So thank you for signing up, and thank you Webull for sponsoring this video and bringing us this excellent deal. Now, if investing is something that you're really afraid of, you can of course consider safer instruments like fixed deposits, bank accounts, SSBs, and T-bills, which are now all giving pretty decent interest rates because the interest rate environment now is quite high. And if you are someone who is very reluctant to invest, saving your money into these instruments is better than not saving at all. So if you're someone who's really very reluctant to invest, I would suggest looking at all these things to increase your interest rate. And I may be preaching to the choir here because I think most of you, if you have watched my channel, you'll see all the fixed deposit videos that I've done. So just a reminder, in case you are new to my channel, okay, you can tap on the links here for videos on fixed deposits and bank accounts. Lastly, I think it's a good time to look through your insurance portfolio to see whether you're adequately covered in events such as critical illness or hospitalization. Now, there are a lot of people who also rely on their company's insurance instead of getting their own personal ones, and I think this is quite risky. And again, with times like this and layoffs are quite possible, you may lose not just your job, but also your insurance coverage should you be retrenched. So I think you should definitely review your insurance portfolio because the last thing you will want in a bad economic downturn is having a medical event that requires a lot of money and you don't have enough insurance cover to cover that event. And again, I'm nagging, but try to stay away from things like whole life policies, ILPs for coverage. These are bad ways to cover yourself, and you should be looking at things like term policies, as well as disability income insurance, and a shield plan if you have not already gotten one for your hospitalization coverage. Check out my insurance webinar over here. So that's my quick update from overseas. As you may have noticed, the surroundings are a little bit different. So when I'm back in Singapore, I'll share with you all about my overseas trip, as well as, of course, continue creating more videos that are hopefully better and more polished than this. If you like my content, do drop me a like and subscribe to my Telegram group for great deals and more content. Also tap here for more videos, and I'll see you in those videos.